Let's talk about the dollar rate of return today. It's the same as IRR, what we call internal rate of return. A project costs $100,000 will return $50,000 in the end of first year, $20,000 in the end of second year, and $100,000 in the end of third year. With required rate of return of 20%, would you accept the project? Go to Excel and type the time index. So 0 would be today, and 1 would be the end of first year, and then drag down until you get 3. So you have to pay $100,000 today. In the end of the first year, you get $50,000. In the second year, you got $20,000. And in the third year, you got $100,000. To get the IRR, we just need to use the equals to IRR function and then highlight all those cash flow. Then we got 27.36%. Compare with the 20% in our question, the required rate of return. 27% is higher than the required rate of return, so we need to accept the project. The project would most likely generate positive NPV because the cash flow is normal. That's all for today. Thank you.